Let's get started. First things first, Liane, thank you so much for joining us today. Really appreciate that. Maybe you can just tell us a little bit about yourself and a little bit about your background, a little bit about CSI, and then we can get into some of the content and talk about it. Just so you all know, I've known Liane for a couple of years now. We've done some work together. We've actually helped a couple of companies optimize their payment structures and their vendor payments. It really is a no-brainer, which is why I'm so excited to have you on. I think it's one of the hidden no-brainers in the marketplace right now, and I'm really excited to have you present all of this to everybody that's out there listening today. So thanks so much for coming.
Yeah, Mike, thanks for having me. It's been great working with you these past couple of years. Everyone that's listening, I hope you're happy and safe out there at your homes. I am calling in from Naples, Florida today. So you heard my name, it's Liane Sanson. I'm with a company called CSI, which stands for Corporate Spending Innovations. I've been there for 11 years. What we're going to be talking about today is integrated payables, and that is the concept of taking something that can be easily automated, such as supplier payments, and getting it consolidated for the efficiency benefits, but also bringing in a revenue stream to your business. So you'll hear all about that today.
Yeah. So can you talk to us a little bit about just really quickly before we jump into the content? Um, I don't think a lot of folks know what integrated payables is. Can you give me a good definition of integrated payables before we jump?
So CSI is a B2B payment issuer, which means that we work with businesses. You all know consumer payments, consumer being PayPal or Venmo, or any of the tools we use as a consumer to send money to the bills we have to pay or the people that we need to pay. It's taking that same concept into business. So today, especially in the US, it's very manual, meaning we're primarily still check, and we'll look at some of those stats. We're the only country that still issues paper checks. So what CSI does is tries to convert that, CSI being one of many providers out there that does this, converting manual paper check-based payment processes to electronic. One component of that is virtual card, which you'll learn about today. Virtual card is one-time use credit cards, MasterCard, Visa, American Express, using those to pay suppliers. And then what can't be captured on card, sending ACH, EFT, wire, we can do FX payments, and there will still be a component for paper checks, but especially right now with COVID, what these type of products that CSI offers does is allows you to pay suppliers from wherever you are. So I know clients today that are having to go into their offices in Manhattan to collect checks or distribute checks. There's no need for that anymore, and this is a perfect time to have a conversation around automating that.
Yeah, absolutely. And I'm seeing that inside of the procurement foundry, right? We're having automation issues with vendor payment situations where now that we're kind of in national lockdown, it's really difficult for people to get access to those more traditional payment solutions, right? Which is again another reason why I think this is perfect timing to be talking about this. I mean, I hate to say, that we've got a situation on our hands that's causing that, but I think that a lot of people don't understand that there's actually a viable solution to this that's pretty easy to implement, deploy, low friction, low overhead, and actually generates income back to the company. So I think at least the first time I saw this, I was like, okay, what's the catch? And there is no catch. After digging into it for, I don't know, 4 or 5 months with the CSI team and doing all the research that I had to do for my client base, and then realizing now that people are kind of, shelter in place at their homes, getting back out. I've seen people who not only can they get to the office, but, and this is interesting. You'll like this. We had a situation earlier this week last week inside of Procurement Foundry where we had somebody who was able to get back into the office, but then realized that their check printers had run out of ink and needed ink cartridges to get to their check printers. It took another 5 days to find somebody inside of Procurement Foundry who FedExed them some ink cartridges for their check printers because they have specific check printers for impact printing, right? And the whole thing is just a nightmare. So really interesting, and I think it's exciting to see. So let's jump into some of your content. I think you're going to share your screen with us today.
Well,
We've got.
I just want to tell one more story related to
Go
that.
ahead.
So CSI has been in the payment space for 30 years, but last 10 years focused on payables automation. But in the early stages, we were only issuing virtual card. So a lot of our legacy clients are only processing card payments through CSI, and then they're doing their checks and the ACH in-house, printing their own checks.
Mm-hmm.
So when COVID hit, it was a really good opportunity for those clients to set up the check, because virtual card's easy and there's revenue tied to it. So once you have that set up, that's really the priority. But
Right.
checks are important too. So we were able to help a lot of clients turn on check printing in addition to the virtual card spend, and not have to go into the office.
Yeah. Again, ease of use, right? Ease of use, ability to be able to solve problems pretty quickly, and do all of this through someone like yourself is just keeping cash flow going at multiple levels. So, so really interesting. I just want to do one quick thing while you're switching over to your screen and getting set up. Just so you all know, we're on a Zoom meeting, but that Zoom meeting is being broadcast live out onto LinkedIn. I see a ton of people checking in. We've got Nashville, Brazil, Colombia, Germany, a bunch of people from the United States. And then inside of the Zoom meeting, we've also got 20 or 30 people inside of the Zoom meeting. So just want to make sure everybody understands. If you're in the Zoom meeting, you can go to Q&A, or you can go to the chat inside of the Zoom meeting. I'm monitoring both the chat and the Zoom. Both the chat and the Q&A channels inside of the Zoom, and I'm also monitoring up on LinkedIn Live. So if you've got questions for Liane as we go, I know Liane and I work very well together in an interactive manner where, excuse me, where we can break and throw in a quick question if it's relevant to the slide that she's covering, things like that. So by all means, if you've got them and you see something, fire away, and I'll bring it in as it's relevant. Okay, Liane?
Sounds great. So you'll read the questions as they come in?
Yeah, I'll keep track of who's asking what questions, and then we'll go from there.
Okay.
All right.
And for everyone listening in, this is not intended to be a presentation. This is a conversation between Mike and I and all of you. So yes, ask your questions as we go.
Yeah.
It's not intended to be a listen only.
Great. So why don't you walk us through what this is? I'm really excited for the audience to hear about this.
Okay. So I'm sure more people came on after our first introduction, so I'm just going to reiterate again. My name is Liane Sanson. We're here talking about integrated payables. The company I'm with is called CSI, which stands for Corporate Spending Innovations. We are a fintech, financial technology. We help businesses automate payables, and that's a really important topic right now in the COVID environment. So today's conversation is going to be about how payments impact our world, what the market opportunity is, the payment landscape, the solution that our product and other products provide to that market, and then the perspective of suppliers. Does that sound good, Mike?
Awesome. Absolutely awesome. Thank you. I'm sure because we got some suppliers on the other side as well. So I think that showing both sides of the perspective is really great.
Okay. I'm going to take 30, 60 seconds just to talk to you about CSI, and that's all we'll mention on the actual company. After this, it's going to be about the payment industry.
Can you tell that I told Liane that this can't be a sales pitch? She's been so worried about this. And I'm like, listen, I just don't want it to be a straight up 45-minute sales pitch. And she's like, don't worry, I'm only going to mention the company once. I'm like, all right, great. We love the TED Talk style here. We love to have our membership engaged. So thank you very much. I appreciate it.
And the point of this is just, for you to know why we're here, what we do, why we're having this conversation with you. So I mentioned CSI has been doing this for 30 years. We are a financial technology provider. We work with businesses directly, which means that we issue Visa, MasterCard, and other payment products directly, but we also partner with major banks. So you will see some banks out there, even top tier banks, that are licensing CSI's technology for their own client base. And what we're doing is really providing a technology layer between the clients, the party paying the suppliers, and the suppliers receiving the payment. We connect to the ERP, take the files out, and deliver payment in the manner that the supplier accepts. We'll get into all of that today. CSI was acquired over a year ago by a company called Edenred. Edenred is a French-based company, publicly traded, They focus on payments related to employee benefits, fleet solutions. When they acquired CSI, it was to launch another pillar of their business related to corporate payments. They're a very large company, acquired CSI to get into the game related to corporate payments. You may know a couple companies comparable to Edenred, FleetCor, WEX. Those are names that you can relate to Edenred. Any questions on that?
No, not at all. Nope.
Okay, so Mike, let's talk about the opportunity that's out there. How many dollars are flowing through in payments in the B2B world? You know this better than anybody with your procurement background.
Yeah, the numbers are shocking. The numbers are amazingly shocking.
Yes. Column on the left is B2C. I'm going to leave that alone. It's only up there for comparison. Column on the right is B2B. Those are the payments we're all involved in today. 120 trillion. That's what flows through dollars on a global level from business to business. It's massive. And the US payment is 25 trillion. Card penetration, so what that means is how many of those payments are running on card is 4%. So you can see by those numbers what a massive opportunity there is out there to pay suppliers, convert them from card, from check to card. Most businesses are still very, very heavy paper check. Some of the biggest businesses in the world that Mike and I talk to are still primarily paper check.
So question for you, I'm going to jump in really quick there. The $25 trillion in US payment and the 4% coverage on card penetration, does that include everybody's travel program where we've got P card solutions and we've got personal corporate cards that are paying for corporate payment? Is that factored into that 4%?
I'm not sure, but I would imagine it would be. It probably includes all dollars related from business to business.
I mean, if you're paying Delta Airlines vis-a-vis an Amex card program or something like that, right? It's still considered a card penetration payment solution, right?
Yeah.
As opposed to, hey, I've taken my accounts payable and I'm paying my utility bill on a P card, right? So that covers everything from your T&E and your travel programs all the way through. If you created P cards for, I don't know, everything from your utilities to your catering services and things like that, right? Yeah.
The other stat is electronic, so non-card, but still automated, 36%. So that leaves, more than 50% of the volume out there that can be converted potentially to card or other forms of electronic payment.
Yeah.
So barriers. I mentioned earlier, we're the only country in the world that still issues paper checks in the way that we do. Every business should be considering a program like this. There's no reason to be manually printing paper checks. It's costly for your business. It's costly for the supplier from an efficiency standpoint, but also fraud. We'll look at that in a moment. But the barriers that we see most often in corporations not converting the way they pay. Number one, IT upgrades. The upgrades that are required to systems to be able to process payments, to get their systems to send us the information that we need. Similar to that is ERP systems. Some are homegrown, some are outdated. What CSI did to counter that barrier is we made our system flexible in the sense where we can take any file in any format that has the information that we need to pay suppliers. So if you compare that to a bank, and that's one reason why we work with the banks, is a bank would require you, let's just JP Morgan, Citi, Bank of America, any of them, would require you to create a file in a specific format. That is costly and takes a really long time, and most instances the resources aren't there to do it. So we again countered that by being able to take any file in any format to remove that barrier. So our clients can't say that as a reason not to convert to electronic payments. Cost related to the supplier, that's also a big one. And credit cards have changed over the years. When people think credit cards, they think 3% or more in fees, especially in the B2B space. So MasterCard and Visa, in order to increase card adoption, reduce the fees. So there's something called standard interchange, and then there's something called discounted or large ticket interchange, and it relates to the size of the transaction and the size of the supplier. So a lot of these B2B payments that are on check and convert to card, they qualify for rates as low as 1.45%. So the networks, meaning Visa, MasterCard, and Amex even has something called BIP, where they're negotiating their own rates with the supplier. It's become very cost effective where the value of the card payment meets the fee so that everyone's happy.
Yeah, I think that that's a real misnomer in the marketplace, right? I think that a lot of people think, oh my God, I go down to my local restaurant and I'm charging American Express, and some of my restaurants won't take American Express because it's 3% or whatever banking card it is, right? And then you think, okay, there's going to be a problem if I introduce a virtual card program into my community, and there's going to be an uplift in fees. What I don't think people understand is the fact that there a large portion of their community of existing vendors already take card payment solutions and have worked that into their margins already. And then also one other thing I think is I think this is a really interesting information for Procurement Foundry's membership, because a lot of Procurement Foundry focuses on what we call P2P, which I've talked to you about before, which is procure to pay, right?
Yeah.
Quite candidly, what a lot of us do is what I call the P2P, which is procure to prepare to pay. That's what we really do in a lot of cases, right? And now this gives us an opportunity to potentially be the smart folks in the room and go, hey, listen, now we can take some expertise and some knowledge that we gain all the way down into the actual payment capability. So I think that number one, I think one of the things that I was jumping into this with when I first met you was, okay, there's a lot of fee structure here that I was concerned about, and I had to kind of put a thumbtack in that as we went through the process. And then also because of a preconceived notion to the $42 trillion in business to consumer or consumer to consumer, right? Which is probably, I don't know, triple this, right? But then I also had to think about, I'm actually extending my expertise out to the actual payment level, which not a lot of procurement people actually do. So really, really interesting.
Yeah. And then the last category is ACH. So what we're talking about in this section is your businesses and why they decide not to implement a electronic payment solution and keep going with the way they're doing things. So number one, we said is resources of systems, their compatibility, their flexibility, how they can manage to implement and turn on the technology. Supplier costs are often. So I will talk to businesses and they will say, well, I really don't want to put that fee on my vendors. I'd rather just pay them by straight ACH. The fee is minimal for the benefits of the solution. There's also something called ACH Plus, which is taking it off the card rails, sending ACH with a small fee, but providing so much data automatically to the vendor to improve their reconciliation, their days outstanding. There's all kinds of benefits on the supplier side for a cost associated payment type. Straight ACH is just a deposit to your bank account with little remit detail in most cases.
Liane, just a quick question came up inside of one of the channels here.
Sure.
From Everett, it says, we've transitioned about 160 of our vendors to virtual card payment already. Cost for suppliers remains a bit of an obstacle. Glad to hear that the cost is coming down. Do you think that trend is going to continue?
Yes, but it's up to the supplier to take advantage of it. So I think the networks, the more interchange, the more fee that we can get, the better. It's not always well known that the vendor can qualify for reduced rates. Mm-hmm. So the vendor has to process the transaction with the correct data. It's called data level 3. So essentially what the networks are saying is Visa and MasterCard are saying, if you give me all this data, I will reduce your fee that you pay from $145 to $190. The highest it goes is $270 in our space. Mm-hmm. But the suppliers need to know what the rates are and get educated on what's available to them.
Okay.
I will say too that it's probably been 5 years since those rates came out. The first year, maybe 5 or 10%. Some industries now we're seeing 60% or more qualifying for the reduced rates.
Wow, that's amazing. Okay.
And then the last segment on this screen is talking about the revenue sources to the buyer. So we mentioned a second ago interchange. That's the fee that the supplier pays to accept credit card payments. Later we'll talk about the benefits and the reasons why they accept. But interchange gets broken down into a rebate. CSI issues rebates monthly. Others will do it quarterly, some annually, but any card volume that you are running can earn you, 1% or more back on your payments. So that is revenue back into your business where there was a cost before. So think about that, Mike. You were saying no brainer when we started this conversation. So today you have a cost. You're eliminating that cost because you're no longer having to process checks manually. You're not having to pay the person and buy the stock and postage.
Yep.
Then you're replacing that with a revenue stream of 1% or more.
Yeah, which to me was, when I first dove into this, I dove into this for a couple of clients strictly because we were trying to optimize some treasury related operations, right? And in most cases, I really wasn't looking for a return income stream off of it. I was just looking to offset some of the crushing elements of, risk, vendor management, banking information that can go askew in the system, right? And also just having a bunch of treasury associates running around inside of the finance department trying to constantly pay these people. And what we did was we quickly realized that not only is this an operational improvement and efficiency with the digitalization of vendor payments beyond where it is today, really a 2.0 version of this thing, but the ability for us to be able to work, my clients to be able to work through somebody like yourself to claw back some revenue opportunity off of it on vendor population that's already accepting card payment. But we didn't know about it. We didn't even know that it was feasible and that it wasn't a negotiation point. I thought for sure we were going to have to go renegotiate about 5,000 contracts, and we didn't. We just turned the thing on for our client, and that client started getting value out of it. So that was when I knew that I had to get you on here and talk to people about this, when I knew that it was that easy.
You just brought up a really good point about vendors that are already set up. So when businesses roll out this program, there's a vendor enrollment campaign that is managed by your payment provider. So if it was CSI, we would take your list of vendors, we would go through that list and determine who accepts card. But we're not asking anybody to do anything they're not already doing. So we're just filtering through the list. Those vendors have already independently elected to accept card. They went to a merchant provider. They got set up with the ability to accept through a virtual terminal. They've determined their rates. We're just helping you take advantage of that payment method where the vendor accepts. If they don't accept, then it's a card or an ACH payment.
Yeah, exactly. What else have you got for us? Sorry, I know you want to move on to. By the way, just doing a time check. We're at 1:25, so we're about 25 minutes in. And I know that first slide's kind of chewy and chunky, so so now we've got through some of that.
Skip over that one because we just talked. I mean, we've really covered a lot of this.
Okay. No problem. We got time.
I think this slide you'll be interested in. It's talking about all the processes in procurement, from picking a supplier to managing invoices to payment automation and what can be automated. So CSI is just that last pillar, that payment automation. We are, as a business, looking into ways to handle the whole chain, how we can scan invoices in and automate that invoice receipt matching process. But the payment automation is such an easy step. The only thing that can't be automated in it is cash decisions. You as a business are still determining what you want to pay, what you want to hold back. There's no loss in control, but everything other than that needs to be automated. And these other categories within procurement will automate themselves over time.
Yeah, it's interesting that it's interesting that payment processing right now is at, invoice processing and payment processing. You see mostly a fully auditable. It's at 93%, but I know we're not anywhere near that from a deployment perspective, right?
Yeah, that's just what can be.
Yeah, yeah, yeah.
Um, we talked a minute ago about the cost associated with processing payments, but we didn't talk about fraud. So check fraud is something almost everyone has experienced. Checks are not going to go completely away, but they can be reduced to 10-20% of your overall payments that you're issuing. It's necessary to, one, convert to card if you can, because there's revenue there. If you can't convert to card, ACH, and let's all work together just to eliminate the check process.
Mhm.
Okay. That was market landscape. That's what the whole picture looks like as a payment industry and B2B.
Mhm.
Now we're getting into more product and how it functions. That sound good?
Yeah, I want to just jump back to that for a second. You stay on this slide, but I want to jump back there for a second and
Okay.
just kind of get my head around it
Yeah.
and summarize what I've seen so far. So effectively, about if you're a standard company out there, probably if we added them all together, about 4% of all the vendor payments that we're making across the entire family of people watching today is around 4% of a $25 trillion market in North America, right? And that there's an opportunity for us to be able to present a more secure, more efficient payment solution to your existing vendor pool, which then automates your process and drives down costs for the Treasury Department and improves the P2P digitalization process, while at the same time creating a revenue opportunity from Clawback on the fee structure, that the transaction processing fees associated with the cards that someone like CSI presents to pay on behalf of the payables for said company. Is that accurate?
That's everything. You said it
Okay.
well.
And that fluctuates depending upon that fee structure that's recovered, which is already baked into most of my vendor population's operating expenses, fluctuates depending upon, I'm assuming, the size of the payment, the number of payments, things like that. And you said, I think it fluctuates between somewhere around 270 basis points, which is 2.7% of the invoice, all the way down to what, 150 basis points or somewhere in there?
Yeah, 145. Yeah.
Okay, so 1.45%. All right, so I'm assuming that there's some cost associated with that on your side of the equation for operating that, but you can also, there's companies like CSI can also help through either doing a V-card presentation to my vendor population, can also take over kind of the automated structure of that for me from my Treasury Department and just give them some functionality to be able to say, hey, let's at least get everything to ACH versus check, because of the amount of fraud that I think on the last slide you said is 28 billion a year in errors associated with manual check processing.
Yeah, or
So,
losses.
so I'm sorry.
And losses, yes.
And losses, right? So there's a better, faster, safer way to do all this with less fraud and an opportunity for recovery, and probably a way to optimize trade working capital for your treasury team the same way.
Yeah.
Okay, cool. I just want to make sure I understand all that.
And then on the interchange, you were talking about costs. So the 145 to the 270, that's the all-in network fees, credit card, MasterCard, Visa fees.
Mm-hmm.
And that gets broken up, the buyer, the business, issuing the card, they get the majority of that. MasterCard and Visa takes them, CSI takes them, the bank that's sponsoring takes them. That's how everyone is earning their revenue. And we haven't even mentioned yet that this is, in most cases, a no-cost solution. So CSI doesn't charge fees except for non-card transactions. That gets taken out of the monthly rebate. And I know competitors and other businesses are doing the same. There's no cost to your business because their revenue is associated with the card volume.
Mm-hmm. Mm-hmm. And somebody's asking me some questions about early payment options to the supplier if they choose, on how they choose to receive that. I'm assuming that that can be baked into this strategy as well.
Yes, one of CSI's products is called Early Fund, and it is associated with paying suppliers early. We have a partner in that space where you could take advantage of paying a supplier at day 10, day 30, whatever terms they select. That could be early pay discount as well.
And do I have to negotiate that into my contracts, or is that an option that we can just give to the vendor population post once we deploy a system like this?
It's post. It's really between the financer and the supplier, less about your business.
Really? So I don't have to worry about, so I mean, there's a lot of people in procurement right now that are thinking about laying early payment strategies into contracts. If they can't get that, or if their supplier reneges on that, it's still an option further down the road when you get to the payment option.
Correct. It's not my expertise, but I have dabbled in it. I've worked on it with a few clients, and it's a matter of identifying the vendors that could potentially benefit from early pay.
Yeah.
And working with our partner. Our partner is called Rainstone, to reach out to those vendors and negotiate. So it's not a workload on you.
And that's an additional revenue opportunity, right? If I'm not mistaken.
Yeah.
So you've got the V-card payment, and you've got the prompt payment potentially doubling up as a revenue opportunity for really smart P2P process people.
Exactly.
Yeah,
our strategy is, number one, exhaust all card. Number two, go to the other suppliers and see if we can get them on ACH Plus. And then the early pay financing can apply to any vendor that needs to be paid early, and we'll pay a fee to do so. And that fee is shared back.
Yep. Great. Great. All right. So tell us a little bit more about the platform and how this all kind of works.
This is really a visual that could apply across any provider, but what's happening here is everyone has an ERP system. It could be Oracle, it could be NetSuite, whatever it may be. That ERP system will produce a payment file, and that payment file will hit CSI's UI. We will decision the payment based on the method that the supplier accepts that we've predetermined. Really, what we're trying to replicate here, and something we talk about, we relate to a lot, is payroll. We just send off a file of who we want to pay to our payroll companies, and everybody gets paid. It's more complex in the supplier world because there's multiple payment types, but that's what we're really doing here. You're just telling us what you want to pay, what's approved, and then we're delivering it to the supplier in the method which they accept. That data is all stored, maintained by us and updated, but also accessible to you. When payments are cleared, we send the reconciliation file, the cleared payment data, back into your ERP system. So it's supposed to be a seamless chain of paying vendors and receiving clear data.
Somebody inside of the Zoom just raised their hand. I just want to let you know, if you want to chat me up a question, or if you want to put a question into the Q&A, by all means do so. Sorry, just doing some mid conversational housekeeping. I apologize.
I have a question for you, Mike. My chat's blinking. I don't need to worry about that, right?
No, don't worry about your chat. I got that all taken care of. Okay. Yep.
Let's talk about funding, because that matters. So we've got three payment types here. We've got virtual card, ACH, and check. Check is the simplest because it's your checking account, your checks. There's no moving of money there. We're just taking over the facilitation of printing and mailing them. Yep. So the checks will look like they're coming from you when the supplier receives them in the mail. We hope that to be the least utilized payment type. But they'll clear from your bank account the same way they do today. We'll deliver the positive pay file. ACH can be done through our rails or bank-to-bank transfer, where depending on the bank, we can deliver them a file. If we're delivering your bank a file, you're not moving any money. Your bank is getting the instructions from us. The vendor is inputting their ACH information. We're not touching it, or you're providing it to us. And then the bank will transfer the funds. Virtual card is either pre-funded or associated with a credit line. Pre-funded means you put up the funds before you release the payments. Credit line means you have a credit facility through us or through your bank to have terms on the transactions.
What about multiple ERP systems? There's a question inside of the chat about it seems like CSI provides a solution to have a single platform for all types of supplier payments, which is great. Can it be used to consolidate payments from multiple ERP systems and potentially geographies?
Yes. So let's address the ERP first. So when we started 10 years ago, one of the barriers was trying to get our clients to produce a specific file for us. And our first client was the Four Seasons Hotel, and it took us 7 months to get the file the way that we needed it from their ERP to us. So we ditched that plan and designed our system to be able to take a file in any format. That means that we can use any ERP. So as long as the file has the information we need, we can process the payment. So ideally, we have an integration. It's either pre-built, like NetSuite, those type of systems we've pre-built integrations with that you can take advantage of. And if there's no integration, then we just need to figure out the best way to get a file out of your system, and then CSI maps to that file.
Yeah. I know that I have personally witnessed a multiple ERP feed down into the system across multiple geographies. So I've seen it. I know it can be done, and I know that it works. So in an SMB space as well. So not QuickBooks, but certainly a little bit above QuickBooks, and I've seen that functionality work. And it was actually one of the selling points for one of my clients, which was having an aggregated dashboard in one location with central treasury in a North American operation that could then operate and push payment out across multiple geographies. Right, that was a big selling point for one of the situations that I was a part of.
Yeah.
One of the questions I've got is one of the issues we see with P card payment is a loss of transparency. All we see is the vendor name, but not what the transaction is for. How do we get around that? And I think we're trying. I think it's George is trying to wrap his head around it because he's thinking of traditional credit card payment solutions as opposed to this coming in and really being a vendor payment solution at the end of your accounts payable process. So can we talk a little bit about how that all works?
It's a really good segue into what a virtual card actually is. But before I go there, I think the second part to that question, as far as global capability, so CSI issues in North America, but I mentioned earlier, we partner with a lot of banks, BNP, for example, Citibank, for example. Those we can't issue in a lot of international countries, but you can use our technology through your bank. So this can be a global product.
Okay, fantastic.
Okay. And then, so P cards are a hassle, and that's why virtual cards were created. So a P card is a static number. If you're dumping everything onto one card, it can be a mess to reconcile. Virtual cards are intended for supplier purchases to replace a paper check. So one, the card is unique. It works once for the exact amount that you're paying. So if you're paying a supplier for 10 invoices, $10,000, the card works once for that exact amount. Once the card is used, the card's gone. And then it comes with transactional detail. So you are sending us in your payment file, invoice numbers, dates, descriptions, discount, everything that you want us to associate with that transaction. We're sending back to you the clear data, including all of that information. A check number will be associated with it, just like a paper check has a check number, so does a virtual card. So this payables, integrated payables solution is truly designed to flow in the same way AP flows today.
Yeah, really, really interesting. Reconciliation of P card is, I'm going to say politely, it's a train wreck.
Yeah.
You know, especially if you're lucky enough that your card program is mature enough that you have, because a lot of procurement people are responsible for that. If you are mature enough that you have P cards all the way down to the individual departmental level, if you don't and you have a P card that's covering multiple departments, the complexity multiplies by, it's almost three-dimensionally more complex, right? Because not only are you trying to reconcile something, but you're trying to reconcile something against a departmental code. You get a P card for a pizza, and you have to try and sift through the tea leaves of what the heck that merchant code is. But then you have to try and attach that to a department code. It's a nightmare. Versus if I had a catering service, the catering service was moving me to monthly billing, and I knew that that catering service was taking V card payment, I could still gain the value of paying them on a V card, but have the value of the individual itemized invoicing and then payment on the V card, and get the value of pulling back 1.5 to 1% plus, right, on the
Yep.
vendor population. So
There's a lot of
that ultimately is the difference here, right? That's really what we're talking about,
yes.
right?
And it doesn't have to stop there. So we require specific information with the payment file, but there's also a lot of miscellaneous information. We've had industries where they're associating a client code to the transaction or a job order. The data that you send to us, we send back to you, so you can expand your mind on the capability there.
Question.
Yeah.
Digital B2B sales platform currently accepting credit card through merchant services. This seems quite suitable for. How do you feel?
Say it again.
It seems, so the question is digital B2B systems, sales platforms, right?
Okay.
Currently accepting credit card through merchant services. This seems quite suitable for. So if you're using, let's say you're using Staples, right? And it's a B2B platform that accepts credit card payment through a punch out list, right?
Okay.
This isn't an ideal situation for that, right?
Yes. So there's 3 card types. There's virtual cards, which are one-time use.
Yep.
There's ghost cards, which are recurring use. So that's the scenario where this would apply.
Yep.
The third is plastic cards. So what a lot of our clients do will create a virtual card for Staples, put it on file, and then it works every month,
Yep.
specific amount. So
Okay.
instead of dumping everything onto one card, you're creating cards for specific categories. That could work for an event too. You can create a card. Let's say you're having a Christmas party and you've got a budget of $5,000, and once that card limit is hit, that's all the transactions are going onto there from a spend category. It keeps track of spending. It limits overuse. There's a lot of functionality there.
But you still get the same functionality and you still get the same recovery opportunity, right?
Yes.
Regardless of whether you're using a P card or a one-time V card.
MasterCard at the end of the day. Yeah. You're just putting rules around it.
You're just putting rules around it, right? So you get all the additional value add of it. You get the lower transaction processing overhead with your accounts payable and your treasury team, and you get an opportunity to aggregate all that and put it into the natural flow of, I don't know, whatever percentage of vendor population now takes P card, V card in a program like this that then recovers you as a procurement team and treasury back funds. I mean, like I said before at the beginning of this thing, absolute no-brainer in my opinion.
Yeah.
All right, go ahead. I'm sorry, I keep interrupting. Want to make sure we have time. We get about 15 minutes left, so by all means, let's keep the ball rolling.
We're getting close here. So we already talked about the benefits of the buyer, the supplier. So the reason why a supplier would elect to accept credit card, faster payment is one, which includes guaranteed payment. So you're not paying them faster, but they receive payment and clear payment faster, as compared to an ACH that has a hold or a check that has to wait to be mailed and wait to be cleared. Mm-hmm. Client demand also matters. We have suppliers that accept because of the efficiency, but also accept because that's what their clients want them to do, and it's already built into the cost of doing business. If you're paying them on check, you're not taking advantage of that, but paying the same cost. Secured payments, because they're one-time use cards, they're more secure and not so susceptible to fraud. And then the detailed remittance information. They're getting all of the information that you're sending to us so that they can reconcile their systems, so they can clear payment quicker, improve DSO, and just make their process more seamless as well.
Awesome. And I don't think, listen, I think that one of the things I learned through getting educated on this is certainly vendor payment and treasury needs on the vendor side of the equation, right? Mm-hmm. So there become opportunities, I'm assuming, during the year where at certain at certain parts of the year, which are financial catalysts, quarter end, fiscal year end, where vendor population who don't necessarily traditionally participate in something like this may participate in this to get rapid payment for their cash flow side of the house, right?
Yeah.
You know, is that accurate?
It is accurate. So a couple things happen. Sometimes we have suppliers that will accept card at the end of the quarter because they want to, they need the cash, they want the cash. And then some buyers will strategically cut checks once a month, but card once a week. So
Yep.
there's all kinds of ways to maximize the card potential and benefit the vendor.
Mm-hmm. I have a question around. It says, so if you're paying for your supplier now via EFT, what is the process to transition to a CSI type solution? And we'll get to that at the end. We can talk a little bit about how to onboarding and things like that. But I want to run through this particular slide because this slide actually shows kind of the crux of a real case study, right?
Yeah.
Yeah.
So one of the exercises you can do as a business is conduct a vendor match, and that's taking your vendor data, your spend data, comparing it to a database of accepting merchants. That allows us to return to you the volume we expect to capture overall. So we'll be able to tell you what vendors we know we can pay because we're paying them today, and then a high low of what we can capture on top of that, plus the rebates associated. So you can start to put some numbers to this on how it would impact your business. And the revenue is really just an upside. Don't forget about the efficiency here, because that's really what we're talking about and what we're trying to accomplish. The revenue is just a plus, in my opinion.
Yeah, I agree. I think the cost avoidance associated with additional treasury, especially in companies that are in hyper growth mode, right? You get a company that's got 150, $200 million in third party spend right now, but 2 years from now, beyond COVID and everything that's going on right now, you're going to have a company that's $600 million, $800 million in third party spend. That treasury department is growing exponentially larger, and for you to be able to optimize that and lay some of that work off when it's critical at that point in time to not be dumping FTEs on because you're not aware of a solution like this or the marketplace, the recovery side of it on the back end almost becomes just an added bonus, you know?
For sure.
So let's run through the matching side of it, and then we'll talk a little bit more about the fact that you get a new channel inside of Procurement Foundry. I think you'd probably be willing to do some of this for some of our membership. So let's run through some real quick numbers and then talk about how they can get in touch with you more.
Sure. The example that you're seeing on the screen, 130 million in total annual payables, which is really on the smaller side of a lot of businesses out there. But we work with companies that do 10 million a year up to 50 billion a year. So there's really a wide range there.
Mm-hmm.
So in this scenario, 130 million in total payables, we estimated capturing somewhere around 25, 26 in spend, which would return an annual rebate of over $200,000 to this business. And that's $200,000, but there was a cost before. As I mentioned, we pay monthly, so that's 18 grand back into your business, and just free money essentially.
So you get 137 million in third-party payables. It looks like your total eligible vendor population is what, 92%, right? Mm-hmm. The stuff that you know today. So if I'm reading this correctly, 71 vendors are known and confirmed. You're already doing business with them with another client somewhere else in V-Card payables. Yeah. So there's no barriers to entry on that 26 million, right?
Yes.
So 20% of the money that you're spending out the door right now is essentially eligible for at least a 1% recovery opportunity and an optimization before you even start talking prompt pay or trade working capital improvement to the vendors, right? Yeah. Then you've got a high to medium match capability with another 61 million, which means that they take it, but you're not conducting business with them right now, and you just have to broker a conversation on behalf of the client, right? Yep. And then the third one is low match, which is that 46 million is probably going to continue to be card payment or ACH payment or something along that line. But because of the fact that you now offer full payment structure capabilities, that all kind of goes off to you guys, and my treasury team just pushes a button on a dashboard and tells you when to pay it. So now my treasury team becomes a little bit more strategic and gets into cash flow management as opposed to chasing down phone calls and talking to vendors when they need to get paid.
Yep. You
So
got it.
so I'm basically taking a tactical relationship, turning it into a strategic relationship. And the best part about it is that all of my friends that are on today listening to us, it's the procurement guys and gals that are bringing this thought process to the table for your next CFO meeting, right? So I'm all about helping my peers inside of Procurement Foundry look smarter. And I think that this is definitely one that in a day when we're all grasping at straws on what to do, this is just really, really smart thinking. So I get it. And then that 26 million that is eligible right now, that just goes into the pool and you start paying that 26 million in a more secure way on V card payment. And then you're clawing back, I don't know, 1% of that, right?
Yep.
One and a quarter, 1%, whatever the number is. And I'm sure that it scales up as you get bigger. And I mean, 137 million in third party spend is, probably one day for a lot of the people that are on this call. So you can see where these scale numbers go pretty quickly. Really, really interesting. Okay, I get it. I think everybody else gets it. So a couple of things. I'm going to jump to Q&A for a minute. We've only got 5 minutes left, so we're going to have and we've been doing a lot of the payments already. A lot of the questions already. So let me see really quickly. What about open banking? Do you think open banking will be increasing the competitiveness of the marketplace?
I can't say I know a lot about that topic.
Yeah. Okay.
Yeah. Sorry.
Okay. No problem at all. Let's see. I think we covered all of the questions from everybody
There was
so
a question
far.
We didn't answer right before we got into the match about EFT. So if a vendor's
already yeah. Sorry. Yeah. So you want to answer that question?
All the time that have already rolled out an EFT program and then want to convert to card, and we do that all the time. Once a vendor is receiving an ACH and there's no cost to them, they want to hold on to that. But a lot of the suppliers are big businesses that wouldn't know the difference. So you may not get as high as a card adoption, but there's always going to be some potential for card. Let's say it's 10% on the lowest end, which is the lowest I've ever seen it. That's still 10% that's bringing in revenue. And if you're a big business, that could be significant dollars. So I hope that answers the question.
Yeah, I just got another one while you were talking. We've got an active card program with one of the larger bankers that you probably know. If this is already in place and we are heavy into the P card program, does this make sense to evaluate?
Very, very much so. Yes. I don't think that's ever too late to evaluate something better.
Yeah. Okay. One thing, when you're presenting payment, and I know you talked about whether the fact that CSI can do this independently or they can work with your bank. Are you aligned with one card program, multiple card programs? How does that all work?
I mean, the first thing to do is a conversation with you on how you have payments set up today, who you bank with, what you're doing, and it's pretty customizable from there. It just depends on your partners and your processes. It's an individual conversation.
Yeah. What percent of vendors try to increase their prices if they are being asked to accept payment via credit card schemes rather than ACH or check?
Once in a while, you'll see a vendor that will say, yes, I'll take card, but I'm going to charge you 3%. We just don't enroll them. It wouldn't make sense. And the card's a specific amount, so they can't tack on a fee anyway.
Yep.
Sometimes we've had clients with concerns about raise in prices over time related to card payments. Four Seasons CFO actually talked about that years ago. And he, at one of our board meetings, said that he had tracked that over years and saw no association with it. It's already built in, and the fee is so minimal.
I actually read a knowledge piece on this from another research firm that said that as we go from 4% acceptance of card services up to, I think, 9 or 12% over the next 3 or 4 years, the market actually gets more and more competitive, and that fee structure comes down and or will just be absorbed into the operating business model. And then that recovery opportunity will stay, but the fee structure that they're recovering will come down. So It'll be interesting to see when we get out of, I mean, the fact that we only have 4% of this actually covered right now
A lot out there.
is shocking to me that, that there's, I don't know, what is that, 23, $24 trillion out there that could be converted over to cards. So let's talk really quickly about what CSI offers. So really quickly, CSI is the newest community partner inside of Procurement Foundry for all Procurement Foundry folks. They now have a new channel inside. You can go to #partner_CSI. I know that Liane is monitoring that channel. I think the presentation from today is up on that channel as well.
Yes.
And I think that if I'm not mistaken, you can offer vendor evaluations so that
Correct.
people can see what the potential opportunity is here without any risk to that clientele, right?
Yeah. And what that is just a list of vendor data. We can sign an NDA if you need to. Within a few days, we'll return the results to you.
Yeah. Cool. So listen, we're going to wrap up. We're out of time here, but if this is something that's interesting to you, I know it was interesting to me the first time I heard about it. If it's interesting to you, please jump back into the Procurement Foundry. Liane's actually going to be speaking during the lunch session at Forge as well. She's going to be doing another one of these for the 400 or 500 people who have signed up for Forge. Maybe a little bit different than this one, but at the same time, she'll offer more Q&A. And she's also got a channel inside of Procurement Foundry now, specifically or not specifically associated with CSI. If you're interested in just talking vendor engagement and vendor payment services and workflows and processes, how to potentially talk about this with your CFO, anything like that. I know I've known Liane for a long time. She's always willing to help. So thank you very much, Liane, for your time. I really appreciate it. This will stay up. Thank you very much for being one of our first full-length LinkedIn Live broadcasts. So we really appreciate that. I'm glad we get that technology buttoned up a little bit. And I look forward to talking to you more about this in the future.
Yeah, thank you.
Thanks so much. Have a great day. Just stay safe down there in Florida, okay?
You too.